Welcome back, YouTube, for another market analysis for the London session. We are going to be looking over S&P 500 and also gold, see some levels that we'd be able to play for the London session and potentially into the US session. So let's go ahead and review the London session for yesterday. Played out exactly how we wanted to see. We had a nice move down, and then we hit a strong level of support, which you see right here, which is one we noted in the analysis for you guys. Look out for 86, 85, and look for the move back up. And that actually happened during that London session. You had a nice pull from this area of 86 all the way back up into a strong level of resistance right around these 20 to 21s. All right, from there you saw in the US session we started to pull down, and we're continuing to pull down. In the analysis from yesterday, we said below these 80s we're going to see a continued pull down, and you can see we took this area, which is prior level of support, and we started to turn it into resistance. So you can see here, level of support, level of support, level of support, turned into resistance, 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 still pulling down. So what are we going to be looking for on S&P 500? We could potentially see first, we got a strong bounce here at these 54.25s. You can see that support. Below that area, you're going to have another area of support and prior resistance as we target that area right over there at about 48.25. Right now, there's really no indication to be going long, but if you are, your first area is 54.25 for the fade back up. But you got some strong level of resistance here, somewhere around these 65.50s. You can see price did break up a little bit, and then we started to hold this level. It becomes a very strong level of interest for us to take a short opportunity down into these 54s and potentially below that into those 48s. So we want to pay attention to that. If we stay below these 80s, we are going to continue to see a move down. I do have some levels below that. Below 48.25, we're going to probably be looking somewhere around these 38.75s for a decent support there. But with markets, you'll never know. It could just blow right through that level. So we want to allow the price to get to those levels, structure itself out, and then look to trade it. As of right now, you can see how it would react as resistance if we get there. We'll look for a double top, maybe a triple top. We can even look for a two-try failure. It can even pop up, come back underneath, and you get a head and shoulders opportunity for the pull down. Right, so a couple different scenarios that could play out, but if you really are adamant about that long, then look for these 54s. Price could get to it, through it, come back up, and hold the structured level. Then you can look for a long back into the resistance again for that fade move, right? But again, keep in mind the trend is down, so you want to go ahead and trade with the trend. That's your highest probability trades there. Let's take a look at a 5-tick here real quickly. We'll see a little bit closer as we got these levels popped up on the 5-tick, how the market moved. Very nice triple top here, very nice movement. We have another 1, 2, and 3 tries, and you actually get a fourth one right up underneath for the failure, and then the market moves right back down. Now we could actually even go into a range here, right? And the way you would play that range is you would sell high and buy low, right? So if you got structured support at 54, you buy the low. If you got resistance at the top, you sell the high. So probably don't want to play in the middle, but if you feel like you have to, just know you want to see some support happening in that middle or resistance before you decide to play right in the middle. All right, but better areas are to see the highs and lows fail, and then again short the high and buy the low. All right, that's how we're going to play that for S&P. Let's take a look at gold. Gold is pretty much around the same levels, and we'll go over what it did. You can see the market pulled up during that US session. You can see it pulled up very nicely, and then it started to gradually pull down in the afternoon. So we did take those support levels. You can see we highlighted them, and now they're red because those supports are turning into resistances, and you can see how the market reacts as resistance. We came above, couldn't hold that support. We're looking for this general area right here, right around these 1870.8s to be our level of resistance to pull price down. Now we are under a level of support right now at these 66.7, so we can see this market potentially hold this area as a level of resistance and pull down. But if it doesn't, right, if it gets back up above and it holds the support here, look for the market to turn right back into these 70.8s and be the first area we target. It could still be in a downtrend, but you're going to have to wait for those 70.8s to show you resistance to continue the trend down. All right, and if you are wanting the long, I'd probably say the better long is going to allow price to get to these 1862s and then see the support here. If you get that supporting idea, then you can look for the long into 66.7 and then back into the resistance to 70.8. It can get all the way back up into the levels above 74, 76, 78, all the way up there, but we'll have to break through some resistances first before we get there. Let's go ahead and take a look at a closer chart, that 5 tick for gold, see what we're looking at. You guys can see, again, we can see where the market failed to get higher and double top here. Nice couple rotations here, and the market started to gradually pull from there. So you can see where we're at right now. We're struggling to get back above this level. So we can use this area as resistance first and then get another pull down. Or we can break it back up, get that support, and then pull right back up to our levels of resistance, right? So we're going to allow price to structure itself out and then trade it from there based off of what we see. Again, we don't make up these levels. We look at what the market has given us, and then we go ahead and trade it based off of what the market has already shown us on the charts. So that is it for S&P 500 and gold. Hopefully you guys enjoyed it. If you guys did, please go ahead and smash that like button. If you guys are not subscribed to the channel yet, please go ahead and subscribe. If you guys are, really appreciate you guys watching. If you have any questions, feel free to pop them into the YouTube channel. We'll get back to you. You guys take care. Have a good night.